Hey everyone, welcome to your Algo Lab. In today's session, we'll give you a quick recap of the most anticipated earnings releases. We'll also take a closer look at individual companies and their peers within the same sector. Without further ado, let's dive in. Procter Gamble is a leading global consumer goods company, recognized for its broad portfolio of products in categories such as household cleaning, personal care, and health. While generally considered a defensive stock, PG faces challenges from fluctuating raw material costs, currency exchange rates, and competition. In Q3 2024, Procter & Gamble reported earnings per share of $1.93, matching the consensus estimate of $1.90. The company's slow start to fiscal 2025 raises concerns, with organic sales in China down 15% in Q1, particularly impacting skincare. However, sales may pick up in the second half of the year to meet the 2025 growth target of 3 to 5%, with consensus at the lower end, thanks to an easier comparison base and upcoming innovations across its diverse product lines. This highlights the resilience of 85% of its business, with management expecting China to return to growth within a few quarters and markets expanding by 3 to 4%, despite ongoing geopolitical pressures in the Middle East. Procter & Gamble's Q1 EBIT margin met expectations, with strong productivity gains offsetting a slight gross margin miss, resulting in a narrow adjusted EPS beat. Additionally, a neutral full-year foreign exchange impact outlook is seen as a positive. Next, let's evaluate how Procter & Gamble has performed relative to its peers in the household products sector. This defensive sector tends to outperform during market downturns but underperform during bull markets. We have also compiled key financial metrics for Procter & Gamble and its peers. The analysis includes two sections: quality and valuation. In the quality section, we consider metrics such as revenue growth, net profit margin, free cash flow margin, debt-to-equity ratio, and current ratio, with higher composite quality scores being preferable. In the valuation section, lower values indicate a more attractive valuation. Schlumberger is one of the largest oilfield services companies in the world, providing technology and services to the energy sector, including drilling, production, and reservoir management. Schlumberger stock is typically influenced by oil prices, energy demand, and exploration activity. The company is known for its strong global presence and technological expertise, which positions it well during periods of increased oil and gas investment. Investors often view the stock as a key player in the energy services sector, with growth potential tied to the oil market's recovery. In Q3 2024, Schlumberger reported earnings per share of 83 cents, missing the consensus estimate of 89 cents. Despite a slowdown in oilfield activity that may extend into 2025, SLB's margin enhancement efforts could boost EBITDA. Revenue remained flat quarter over quarter, falling short of low single-digit growth expectations, with gains in North America offsetting a slowdown internationally. Segment-adjusted pre-tax margin rose by 60 basis points, with improvements in the digital and production units balancing declines in drilling and completions. The company expects modest revenue growth in Q4 and 2025, with international markets outpacing North America. Strong free cash flow has allowed SLB to reduce net leverage below 1x, even after over $500 million in buybacks, supporting its 2024 capital returns target. SLB also announced an agreement to sell its stake in a Canadian upstream project and anticipates the ChampionX merger will close by early 2025. Next, let's evaluate how Schlumberger has performed relative to its peers in the oil and gas equipment and services sector. This sector tends to be less correlated with the broader market, as factors like oil prices and overall energy demand play a more significant role. We have also compiled key financial metrics for Schlumberger and its peers. The analysis includes two sections: quality and valuation. In the quality section, we consider metrics such as revenue growth, net profit margin, free cash flow margin, debt-to-equity ratio, and current ratio, with higher composite quality scores being preferable. In the valuation section, lower values indicate a more attractive valuation. On this channel, we share tested strategies for investing and trading, covering everything from technical analysis and fundamentals to economic trends and sentiment-based algorithms. If you don't want to miss out on any of our content, be sure to like, subscribe, and hit the bell icon to stay in the loop. Thanks for watching, and I'll see you in the next video.